In this video, I'm going to revisit an old strategy which I created back in 2021. And since I created the strategy, every trade has been profitable. I created the strategy and then I made a video detailing the development process. And then I released it here on my YouTube channel in October 2021. The strategy is based on using specific market conditions, using a couple of ideas which I picked up from Larry Williams. In this video, I'll give you all the rules to the strategy so that you can use it too if you like, but I'll also link the original video so that you can see my full development process. Now, I must say that although the strategy has a 100% win rate since I developed it, it doesn't trade very often. In fact, it's only made 10 trades since I developed it and made that first video. But still, 10 out of 10 trades winners is very good. I'd be much more excited if it was 100 winning trades out of 100, because those numbers are much more significant than just 10 trades. I've been meaning to do an update video on this strategy because it's been performing quite well, but I'd completely forgotten to do it until one of you guys emailed me the other week asking how the performance had been getting on. So here it is. Firstly, I'm going to show you the rules to the strategy, and then we're going to have a look at the past out of sample data and the most recent real out of sample data. If you're not sure what I mean by out of sample data, don't worry, I'm going to explain that a little bit later as we look through the performance reports. So firstly, let me show you the rules for the strategy. Okay, the rules for the strategy. This strategy works on US dollar, Canadian dollar on a daily chart. And for the trade entries, we're looking for 3 specific conditions. Number 1, we're looking at TDOM, or trading day of the month. So for this strategy, we're only looking at trading day 8. If it's trading day 8, then we look to see, is the close less than the close 5 bars ago, or in this case 5 days ago. If it is, then we move on to number 3, and we're looking at the Williams percent R oscillator. I have this set to 14 periods, which is standard on most charting packages. And we want to see that the oscillator is slightly oversold, below 50 or below the midline. Once we see those 3 conditions, then we buy the next bar on the open. And I'll show you some examples on the chart in just a second. Looking at the exits, we have a stop loss of 350 pips. That's just a fixed pip stop. And number 2, we're using our bailout exit, or our first profitable close, but with a 7-day delay. What that means is we have to be in the trade for a minimum of 7 days, and then after the 7 days, we look to see at the close if we're in profit. If we are in profit, then we take the profit and we exit the trade. If we're not in profit, then we stay in the trade. So we're always in a trade of minimum of 7 days. Now, I actually ran 3 optimizations when I was developing this strategy. I optimized for the best trading day of the month, and I actually optimized for the highest percent profitable. You can see that in the original video. Then I optimized for the bailout exit with the 7-day delay. I optimized that 7-day delay number, and I found that for what I wanted, 7 worked the best. And then I optimized the stop loss and found that 350 pips worked very well too. So let's have a look on the chart. Here's some trade examples. The first one here that we can see, we don't know it's trading day 8, but take for granted that it is trading day 8, and we see that the close is lower than the close 5 bars ago, and this is the Williams percent R oscillator. Yes, it is oversold, or it's certainly below the midline. So we get in the trade, and then we've held the trade for 1, 2, 3, 4, 5, 6, 7 bars. That 7th bar, we were in profit, so we exited on the open of the next bar. Another one here. This close here was lower than the close 5 days ago. It was trading day 8, and the oscillator was below the midline. And we've got our bailout exit, and the same on here. So as normal with a lot of my strategies, a really simple one to trade. When I first developed the strategy, I used data from 2008 through to 2018, and that's what I called the in-sample data. And you can see this in the original video. And then I took the data from 2018 up to October 2021, which at the time was the most data I had, and that was what I call the out-of-sample data. The out-of-sample, or that smaller period of data, none of the optimizations which I'd previously done were included using that data. So any of the previous optimizations which I'd done, if they had been done correctly, if the strategy was robust and the edge still existed, I'd like to see the performance continuing in that smaller out of sample or most recent data set. And as you see in the original video, that was the case, that the strategy did continue to perform in that few years of out of sample or unseen data. But now it's July 2023, a few years extra. So now we have a really big sample of out of sample data. We have that original 2018 to October 2021 chunk, but then we have from the date of creation, or October 2021, right the way through to today, which is July 2023, and that's what we're going to look at next. I'm going to show you three separate strategy performance reports. The first being the most recent data we have, that completely unseen data from October 2021 to July 2023. Then we're going to look at the full out of sample from 2018 to July 2023, and then we'll look at the full data set from 2008 through to July 2023. In this first workspace, we're going to be looking at data from October 2021 through to July 2023. If I scroll back, we can see through the trades, and we can see that the first trade is in October 2021. Looking at the performance report, we can see we've had a total of 10 trades and we've got 100% winners. There's what the equity curve looks like. In fact, there's the close to close, and you can clearly see that every trade there was a winner. By the way, I want to mention that I have included $40 per trade of costs. Let's just go back to the total trade analysis, and you'll see that we've got a massive average trade anyway of $1,491. This is trading one full lot. And those of you who have already noticed, this is a buy only or a long only strategy. I want to just show you the buy and hold chart, and you can see that yes, okay, US dollar Canadian dollar has been in a bit of an uptrend, but not perfectly. And later on, when we're looking at more data, I'll continue to show you this buy and hold chart so you can see that we're not getting our edge on the long side just because US dollar Canadian dollar has been going up over that 14-15 years. So the next workspace, we're going to be looking at data again up until very recent, which is July 2023, and starting trades in 2018. So the data we see here is the out of sample data, which wasn't included when I done any of the first testing or the optimizations. So looking at the performance report, there's your buy and hold. So you can see that US dollar Canadian dollar actually pretty much moved sideways over this period, with some flat periods, some down periods, and some up periods. There's the equity curve for our strategy. The close to close equity curve looks like that. And total trade analysis, we made 27 trades. 26 out of those 27 were winners, which gives us a 96% win rate with a huge average trade of $906. There's our largest losing trade, which is our stop loss at 350 pips. I mentioned in the original video that I also looked at short selling, because what you're seeing is actually a long only strategy. But I just couldn't find a decent enough edge with the trading day of the month for the short side. I would be much happier if I did have a short side of the strategy to complement the long side. But as you'll see from the results, it's not always necessary, especially when you're dealing with biases. In a moment, we're going to look at the performance report with the most data, that in-sample data and including both the periods of the out-of-sample data. But first, I want to offer you some more strategy ideas, which I've put together in my 22-page Beat the Markets strategy guidebook. So if you're looking for more rule-based strategies like the one we're testing here today, then I think you'll find the guidebook really useful. At the moment, you can get it absolutely free if you find the link down below in the description. And I have some even better strategies in my popular trading course, which I think you might be interested in. They don't win 100% of the time, but they're pretty good. You can find out more about those and how the rest of the course can help you using the link also down in the description. Okay, let's go and have a look at our last performance report. So looking at the last workspace, and this is actually the exact same workspace as I used in the original video, just with the updated data. And in this workspace, we've got data right back to 2008. So the trades are starting back in 2008 through to July 2023. So looking at the performance report, that's what the equity curve looks like. So if I look from 2018 onwards, which is about here, so this point here to the right is all out of sample data. And if we look from October 2021, when I developed the strategy and released the first video, which is about here, so everything to the right of that is true, unseen, out of data. There's the equity curve, close to close, which is very nice. Total trade analysis, we've got 77 trades with just 5 losses, which gives us a 93.5% win rate, with a massive average trade, $765. Largest losing trade is still the same. That's still our stop loss value of 350 pips. And let's just have a look at the buy and hold value. And that's what the buy and hold return looks like. That is purely just the price chart of US dollar, Canadian dollar. And you can see we've got really varying periods throughout that period of time. So although it is a long-only strategy, it's worked even in the down periods. So that's the updated performance report for that trading day of the month strategy for those of you who have been interested. It's obviously been doing pretty well since I developed it, but that's not typical of all my strategies. When I develop a strategy, I'll always include a watch period. So after I've developed it, I won't do anything, I won't trade it live, and I'll watch it for a period of months, sometimes 3, sometimes 6 months. And then if it meets all the criteria which I want to trade live, then I'll put it in my portfolio. But not all my strategies do make it through that watch period, but I'm pleased to say that a decent amount do. Hopefully this video has helped some of you guys out today, and it's given you some ideas of how to use that trading day of the month technique. When used correctly, that trading day of the month technique isn't just curve fitting or overfitting, and you can use it to produce profits well into the future, which of course is our goal as traders. As I said earlier, if you want to learn more about how I developed the strategy, then please use the link and watch the earlier video. So I hope you've enjoyed this video. If you have, then please give it a thumbs up and consider subscribing to the channel for more strategy videos like you've seen today. Hopefully I'm going to see you next time, but until then, this is Jared Goodwin, and thank you.